Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Tap round Vietnamstockmarket.entry with the phone number is +8491-432-6556. Or you can also scan the QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name, Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She is a personal financial advisor and a Viet Capital Security Stock Broker Manager. You can contact her with the email home.nguyen@vcsc.com.vn with the phone number is 8491-432-6556. We always welcome you to our office on the 11th floor, 109 Trần Hưng Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about Vietnam macro flash note, current account returns to surplus in Q3 2022. Vietnam's balance of payments recorded a deficit of $15.6 billion in Q3 2022, expanding the overall balance of payments deficit in 9 months 2022 to $21.5 billion compared to a surplus of $12.2 billion in 9 months 2021. According to the latest data from the State Bank of Vietnam, the balance of payments deficit in 9 months 2022 was mainly due to a large negative errors and omissions line of $8.9 billion incurred in Q2 2022 and $12.2 billion in Q3 2022. Current account balance returned to surplus following 2 consecutive quarters of deficits. The current account balance posted a surplus of $1.5 billion in Q3 2022, narrowing the 9 months 2022 current account deficits to $5.1 billion compared to $11.3 billion in 9 months 2021. The goods trade surplus free on both FOB improved to $8.8 billion in Q3 2022 compared to a low base of $1.5 billion in Q3 2021, raising the goods trade surplus to $17 billion in 9 months 2022 compared to $5.6 billion in 9 months 2021 due to a robust recovery in the merchandise trade. In addition, the services trade deficit narrowed to $3.2 billion, less than $600 billion Q-off-Q. However, the services trade deficit remained high at $11.3 billion in 9 months 2022 compared to $11.4 billion in 9 months 2021, as international tourism has not fully recovered, while domestic demand for international travel and transportation improved strongly. Also, net current transfers in Q3 2022 remained low at $0.9 billion, almost unchanged from Q2 2022. Marking the second consecutive quarter, this category fell to below $1 billion. In 9 months 2022, net current transfers amounted to $3.6 billion, falling 56.8 billion, 8% year-over-year due to lower overseas remittance inflows and higher outflows of current transfers. Financial accounts balance recorded its first quarterly deficits since Q4 2018, mainly due to a swing in other investments. The financial account posted a deficit of 4.9 billion US dollar in Q3 2022, narrowing the financial account surplus in 9 months 2022 to 7.3 billion US dollar, compares to 23.9 billion US dollar in 9 months 2021. Net direct investment was 2.6 billion US dollar in Q3 2022, less than 15.6% year-over-year, bringing 9 months 2022 net direct investment to 9.7 billion US dollar, less than 6.1% year-over-year. However, other investment recorded net outflows of 7.2 billion US dollar in Q3 2022 and 2.7 billion US dollar in 9 months 2022, compares to net inflow of 11.4 billion US dollar in 9 months 2021, due to an increase in foreign exchange deposits abroad combined with a decrease in money deposits by non-residents, individuals, organizations in Vietnam. Outlook. We expect the CA surplus will continue to improve in Q4 2022, but the results could be slightly lower than our previous expectation due to the recent weak performance of goods trade activities. Thus, we raise our CA deficit forecast for forward year 2022 to 2.9 billion US dollar, equivalent to 0.8% of our forward year 2022 nominal GDP forecast from a deficit of 1.5 billion US dollar. 0.4% of nominal GDP compares to a deficit of 7.8 billion US dollar, 2.1% of nominal GDP in 2021. For 2023, we expect Vietnam's CA balance to post a surplus of 4.5 billion US dollar, 1.2% in nominal GDP, which is supported by 1. The ongoing goods trade surplus, 2. Narrowing services trading deficits due to the further recovery of inbound international tourism, and 3. Improving net transfers, and as we expect outflows of current transfers to fall due to easing currency and interest rates. On the financial accounts, the global economic slowdown could slow investment capex, thus affecting FDI inflows to Vietnam in the short term to some extent. However, we believe Vietnam's competitive advantages will support FDI inflows over the long term. In addition, we expect the abnormal high outflows of other investments will decline in future quarters, thus improving the overall FA surplus. While the negative contributions from E&O in 9 months 2022 was unusually large relative to history and should normalize, unrecorded imports and capital outflows could cause further large negative E&O contributions, in turn distorting the overall balance of payments. And now let's take a look on the screen, and I will show you the Vietnam's balance of payments in Q3 2022, 9 months with some figures. Figure 1, Vietnam's balance of payments. Figure 2, Vietnam's balance of payments by quarter. Figure 3, Vietnam's current accounts. Figure 4, Vietnam's current accounts by quarter. Figure 5, financial accounts balance. Figure 6, quarterly FA balance. Figure 7, net errors and omissions quarterly. And figure 8, overall FBOP without nets E&O. Figure 9, current accounts. And that brings me to the end of my presentation about Vietnamstock flash notes today. With the current account returns to surplus in Q3 2022. Hope this video and some information will be useful for you. And if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can support you. So have a nice day and thank you for your listening. See you next time.